Hi and welcome to my final morning report chart appraisal on Friday the 19th of June with me, Richard Perry, market analyst at Tech Markets. Looking at gold now, and this gold chart had a significant rally yesterday that's completely changed the near-term outlook. We had been in this downtrend that was pulling lower. It's now sort of been negated really, and the outlook that had been negative following on from that breakdown of the range has sort of now been negated by this rally. And you're sort of through all these falling moving averages as well, so again that's negated it. Looking at the momentum indicators, near term stochastics are actually pretty strong. That's a strong configuration actually. It's a bull kiss on the stochastics, and the RSI is also fairly positive as well. I would argue though that you're still, you're sort of back into this range bound scenario with the RSI sort of up at 60. You did trade just below 40 on that breakdown actually of the range, but sort of you would argue that the range is basically now back intact again. So it's sort of now range bound trading conditions once more. So you'd be looking out for sort of selling rallies and buying dips, arguably. In terms of the outlook, it didn't close above 1204.30, which is interesting. Sort of dip back in, and the subsequent day following on from a strong bullish candle or strong candle generally can be very telling. And the fact is that at the moment you're seeing a bit of a sort of rolling over of this bullish factor. So the fact is that I still think you're sort of trading around this range bound effect, and you're not really getting too much traction. And it'd be interesting to see what happens now, because this is the hourly chart. I posted on Twitter yesterday the fact that we had a bearish 1 hour reversal, bearish key 1 hour reversal, and that could have marked the top. RSI sort of falling over, MACD lines falling over, stochastics falling over. So it's sort of turned into more of a corrective outlook in the last sort of 12 hours or so on this gold chart. Now the first key line of support comes in this breakout. See this breakout that we had above 1192. That is the first line of support. If you start to see gold trading below that, I think you could then see it sort of drifting back towards the lows again. So at the moment, obviously you're trading above it, and it's almost consolidating here, but you sort of got a sort of like a slightly bearish drift going on, slightly corrective drift. It'll be interesting to see, as I said, if you start to see a higher low above that 1192 level, then yes, you could well see that the gold price starts to retrace back towards higher in the range. And arguably, if you broke back above that 1205 level and closed above it, I would also say, then you're sort of opening up this 1214 level, and then also the range highs again. So that's the key. If you can see a higher low, I think building above that 1192, you could see a sort of move back towards the range highs now. But I think the fact that we've had this big strong candle turnaround just makes the gold price much more range bound again, and so you need to start looking out for sort of moves within that range rather than sort of consistently selling it, because we had been in that negative outlook. That negative outlook has sort of now been negated, certainly near to medium term anyway, and the choppy trading continues in gold. So it's a fairly indecisive, uncertain outlook on gold, but still it has improved and is no longer bearish, so we're sort of turning neutral on gold once again. So I wish you good luck in your trading on gold today, and I'll speak to you again on Monday. Thank you.